All right. Hello. Hello, everybody. Thank you for joining us today. It's been a while since we put out a market update. And so I wanted to take a minute because data hasn't been really super clear of recent. And so I've been waiting to put out an update until I had some kind of data, or at least some consistency in data where I could confidently feel like I know what's happening next. And so that's what we're going to talk about today. I'm going to start real quick by sharing my screen with you. Um, all right. And so some of you have seen this before. Some of you have not. This is something that I put out periodically. I've been doing this for many, many years, and it has been very accurate in the past, and it's continuing to be pretty accurate. We'll adjust it from time to time as things change. And so today I wanted to talk a little bit about where we are and where we're going. I'm going to revise this graphic, and as soon as I do revise it, I will put it out to everybody that's on our email list. So if you want the updated graphic, send me a message at gio at investduel, DUEL.com, GIO at INVESTDUEL.com. Let me know that you want to be on the list. I'll add you to the email list when we get this new updated version. But for now, I'll use this and I'll tell you what the differences are going to be. So we put this last one out in 2021, and it certainly has been pretty accurate so far. The difference here is that in 2023, 2024, so what we have coming up right now is we have a very interesting set of circumstances that are about to happen. We have corporate debt, a lot of corporate debt, especially in small caps. Those are companies that do roughly up to 50 million a year. So it definitely mom and pop shops and local places all fall under that category. Most of those 60% of the small caps that have corporate debt are going to be refinanced in 2024. And 2024 refinancing is going to fall throughout the entire year. So it could happen a lot in one month and not so much in another, or it could be consistent. That's yet to be seen, and I don't know that there's any real way to detail when those are, unless you know when the loans were written, which I don't. But 2024 is going to see a lot of corporate debt being refinanced, and it's going to be refinanced at a much higher rate than what they currently have. And what's going to happen, the research that we did and the statistics that we saw show that 60% of companies that are going to refinance the corporate debt in 2024 will put them cash flow negative, which means that many of them will go bankrupt. And when that happens, you'll see some consolidation in sectors. The small cap banks and the local banks that wrote a lot of that corporate debt probably are going to go broke as well and get eaten up. So you'll see a lot of consolidation in the banking sector. But what that means for real estate is over the course of 2024, there's a good chance as this happens that people are going to start losing their jobs. And even if our government injects money and starts giving people small payouts like they were in the past, it's not going to be enough to save their homes. And so taking a midway point, just, for something to measure against and saying June of 2024, starting from there going forward, there'll probably be some things that come in, some legislation that comes in to help save people from losing their homes, very similar to what we saw over the past 10 years, give or take. But people are going to lose their jobs, and eventually they're going to lose their houses and their mortgages as well. And so we are preparing for the first pullback of real estate prices to happen sometime in 2025. Taking June 2024 as a midpoint, the procedure for foreclosing and getting people out of houses and such has been dramatically changed over the years past, and so it could take up to 12 months, sometimes even more, which puts us about 2025, halfway into 2025, 2026. At that time, I think is when you'll start seeing a pullback in interest rates, probably prior to elections. You'll start seeing interest rates come down a little bit, but around that time in 2025, 2026 is where I think we might have a chance for interest rates to go back down very low, possibly to the zero area. I don't know if they actually get to zero, but I think that they will get down pretty low because that will be a silver bullet. for the Fed to be able to inject money, or at least get money flowing, so people can continue, the economy can continue on, and people can continue to be in their homes. So I think if we're going to see anything happen in terms of real estate prices between now and, just as a rough marker, I don't know that it'll happen at this time, but it'll happen sometime from here forward, would be like the middle of 2025, all the way through end of 2025, Q3, Q4, going into 2026, where I think it might be a shit show, or at least has the potential to, depending on what happens, depending on when the Fed triggers and does start to lower interest rates, could start to, invigorate some real estate, to stay alive and maybe even to flourish and thrive. But I think there's still going to be quite a few casualties that are going to create an increase in inventory. And even though there's a ton of cash on the sidelines to scoop them up, it'll be distressed inventory. So very likely prices will end up coming down. So what do you do between now and then? Well, rental rates are still going up. And anybody who's been following me for the past 10 years or more, you know that I've been putting alerts out from the last 7 years that rental rates are going to continue to go up and up and up and up. And they've continued to go up at a rate of anywhere between 7 and 15% a year for the last 7 years on average. Residential rates, commercial rates are also very strong, continuing to go up. Commercial market super strong, especially if you're in Las Vegas. The industrial market, all the way up until 2021, multifamily was the most underserved market in Las Vegas for the past 30 plus years, and now it's industrial, and companies are moving here in droves. Big cash companies doing lots and lots of business are building logistics centers and warehouses and putting their corporate headquarters here. So office space has been going insane. I mean, everybody's like, oh, office is dead. Office is not dead, not if you live in Las Vegas. For the small investor, owning residential properties for long-term rents is going to be solid. I do think that vetting your tenants and making sure that you're doing proper background checks, make sure that their jobs are solid as much as you can, will probably be the right path. Make sure that you talk to your attorneys and get your leases updated. There's lots of new laws that have happened. Some of them are very advantageous to both buyers and sellers. So I would definitely contact your real estate attorney and have them update your lease with any clauses or any updated language that could be beneficial. I think residential rentals is going to be a solid market for the years to come, especially if a worst case scenario happens and people lose a lot of jobs and they can't afford mortgages anymore, but they can still pay rent. I think rental market is going to continue to be hot. Las Vegas is seeing such huge growth. I mean, we're at 3.08 million people right now officially. I still think that number is a little low. We're headed to 5 by 2027. The high-speed train between here and Southern California is going to happen. They've committed to making it happen and become a reality before the Olympics come to LA. So that essentially makes Las Vegas a suburb. I mean, growing up in a big city like Chicago, it would not be unheard of to sit in traffic for an hour and a half, and that's about what it's going to be. It'll be about 45 minutes or so from here to Southern Cal, and then maybe another train into the city, another half an hour with 40 minutes. I mean, you're essentially an hour and a half away from Las Vegas if you're living in downtown LA. So that essentially makes us an option for remote work. It makes us an option for part-time work for people that don't have to be in the office all the time, people that want to get away from the taxes or from the politics or whatever it is that's driving them out of California. I think we're going to continue. And the fact that we have lots of companies bringing their businesses here, and businesses that are relocating employees for the most part. It's really a hotbed right now. Las Vegas is going to end up becoming, you're going to see in the years to come, when they're reporting on strong retail, residential, and commercial real estate markets, you're going to see Las Vegas is going to be at the top of those lists again, like we were in the past. So if you don't have to sell a home, don't sell it. I don't know that right now, gives you any advantage. But if you do have to sell a home, get onto the market quick, because the average days on market is skyrocketing. Just a couple of months ago, it was about 92, 93 for your average median, priced home under Fannie Mae and Freddie Mac loan limits. So, under 650-ish, are taking now, 120 days plus to sell. So you really need to be patient. And if you do have a property to sell and you need some help selling it, feel free to reach out to me. Otherwise, reach out to your real estate professional and get moving on that. If you don't need to sell, then I don't think that right now gives you any advantage to sell. However, if you are thinking about selling in the next year or so, it might be advantageous to consider a sale for 2024. And I believe the earlier in 2024, the better. So Q1, Q2, at least get it on the market so you can hit that days on the market average right around Q3, summertime, when people are in the market buying, spring and, late spring, early summer. So I'm going to go back to this. I'm going to go back to this chart for you real quick, and then we'll wrap it up so you're not here too long. But this is moving a little bit. Here we are in 2023. We're sitting right here. This was steep in a lot of the country. In Las Vegas, it was a little less steep, kind of right around this area here. And now 2024 is going to start to see another buckle. And the buckle in 2024 is going to be slow and steady as far as nationwide. Localized, I'll put out a Las Vegas version of this as well. Anybody that wants both versions or either version, please let me know. I'll make sure I include you. What's going to happen though is you're going to start seeing that softening of prices that could lead into 2025 with a bigger dip coming 2025, 2026. Nationwide, 2024 is probably going to start seeing weak markets really get crumbled. You're going to see markets that have been getting hit, like New York. They're going to have a terrible difficulty. I mean, you're going to see tons and tons of cash go in there, and lots of gentrification, regentrification go on there over the of course the next 3 to 5 years. It'll be a buyer's market there, and some other places around the country as well. But Las Vegas is going to hold steady. If we do see any kind of softening happening, it will not be dramatic. And it will be localized. It'll be in areas maybe that have seen some overbuying over the past months or year or so. But the influx of people that we continue to get here in Las Vegas is going to support prices stabilizing. Again, I don't think you're going to see anything major if you own property in Las Vegas. If you don't own property in Las Vegas and you want to park your money somewhere, but you don't want it to be in just undeveloped raw land, you want it something that's going to at least cash flow or at least have some income coming off of it. Las Vegas is a fantastic place to buy now because prices are only continuing to remain strong and have the opportunity to continue to go up over the course of the months to come, at least until we start seeing what happens with the corporate refis and how many of those companies are here in Las Vegas, and we just don't know that just yet. So between now and then, I would say stay the course. If you are looking to get into a property for rental purposes, now is a good time, because I think that those rental properties are going to continue to rise in price as we go forward. I think that's it for now. It's a little bit of a lengthy update. If anybody has any questions, please feel free to reach out to me. Send me an email, and I'd be happy to respond, or send me a text message and I'll be happy to respond.